Warren Buffett, as you all are aware, is one of the world's most successful investors. He is one of the pioneers of the Buffet Monger approach, which describes how Buffett and his business partner Charlie Munger succeed. This is a four-step approach that simply means people should understand business, have a long-term competitive advantage, have management integrity and talent, and ensure margin safety. This approach does not change over time, but as we all know, there are some things that have been added to this factor that negotiates our investing in 2022. These are the stock market's overvaluation, inflation, and interest rates. Without further ado, let's look at how we can invest in 2022 while keeping these three factors in mind. First, an overpriced stock market. Everything is so expensive right now, so how should we approach investing this year? If you're an active investor, there's a chance that we will not have many opportunities to buy undervalued companies in our field this year. This is especially true if the market maintains its current performance. Now, it is clear that Warren Buffett is attempting to buy the entire company of Berkshire Hathaway, whereas we are only considering purchasing a few shares, but our goals are the same. There is no doubt that he has had a difficult time finding suitable investments for his money over the last year or so, but he does not simply throw his money away on companies that are sold at a high price. That is the absolute worst way to invest your money. Instead, he just keeps accumulating cash while patiently waiting for something to happen. Berkshire Hathaway's cash on hand increased from $84.4 billion in the third quarter of 2016 to $149.2 billion in the third quarter of 2021. Remember that you don't make money when you buy or sell, rather you make money while you wait. Be patient and wait for the right opportunity to present itself, and resist the urge to invest in a market that is significantly overvalued. Because Warren Buffett has stated that you do not need that many great stocks in your lifetime. You can be successful with a small number of exceptional assets. Maintain your patience until the markets finally provides you with one. So that's the dreadful reality of active investments in 2022. However, there is another investing strategy available, which is passive investing, which Buffett typically advocates for the majority of people. It is strongly advised that passive investors who are only interested in the stock market average their investments over time using dollar cost averaging. Continue to make investments in 2022. A passive investor does not need to strive to perfectly time their investments. To be successful, the essence of the dollar cost averaging method is to maintain the practice of purchasing market tracking investments at regular intervals of time. If you continue to do this for several decades, you will achieve an average market return. On an annual basis, the average return is between 8% and 10%. So in the same vein as Warren, passive investors do not need to be concerned about whether the market is high or low. People should just keep investing. You should never read the headlines or look at the charts. Instead, stick to your strategy and keep a long-term perspective, and the stock market will be on your side. Even if you invested everything and the market crashed 30% tomorrow, it would not be a disaster for long-term passive investors. After the global financial crisis, which was the world's worst financial disaster since the Great Depression, it took the market only 5.5 years to recover and has nearly tripled in the 9 years since. As a result, the market is currently at a high point, but it is not the end of the road. We must remember to be patient and avoid making rash decisions as active investors. And if we are passive investors, we must continue in the same manner as before. Maintain your focus on achieving average or gold status. The second factor is inflation. Inflation has been one of the most widely discussed topics over the last month in the United States. The annual rate of inflation has reached 6.8%, and it appears likely that inflation will remain a major topic of discussion in 2022. It is exactly as Buffett stated that in economics, you cannot do one thing without asking. Zero interest rates and constant money printing have finally caught up with us. The rate of inflation is increasing. What we should do in this situation is the question. Buffett has, in fact, long provided an explanation for this one. Let's go back to 1982 when the United States inflation rate was just starting to fall after reaching around 20%. Warren Buffett outlined the types of companies that should be purchased during periods of inflation in his annual letter to shareholders, which he began writing in 1982. Furthermore, the first thing to keep in mind is that we want to look for businesses that can raise their costs without incurring any negative consequences. Take this into account. What kind of company could raise prices significantly without losing significant market share? People will look for cheaper alternatives wherever they can find them. That much is certain. Interest rates are number 3. The Federal Reserve has stated that they are considering increasing interest rates by 3% in 2022. What is Buffett's take on the current state of interest rates? The meeting with Buffett in May 2021 already provides an explanation for why the market is currently so high. Because interest rates are currently at zero, the majority of cash managers are simply not receiving a return on their bond investments. We are currently experiencing extremely low interest rates, implying that stock market valuations will rise quickly. There is currently a significant inflow of funds into the market. However, beginning in 2022, we will begin to move in the opposite direction. The interest rates will begin to rise, and as the interest rate rises, so will the pull of gravity, making it significantly more difficult to jump. Never let the macroeconomic environment influence your personal investments. However, it's important to note that market values may come under pressure in 2022, particularly for overvalued stocks, as new bonds become more promising and interest rates rise. This could be due to a combination of factors, including higher interest rates. What do you think of this approach? Tell us in the comments below. And if you enjoyed this video, don't forget to leave a like and subscribe to the channel.